Hello, welcome again. So in this part, we will solve some problems on the cash and cash equivalents, restricted cash, and on cash discounts, gross and net method. Okay, so you can see that there are 1, 2, 3, 4. There are 5 problems. Okay, so let's go to solve the problems. So the problems will be on learn, so no worry about that. So the first one, it is saying the controller of the Red Wing Corporation is in the process of operating the company's 2021 financial statements. She is trying to determine the correct balance of cash and cash equivalents to be recorded as current asset in the balance sheet. The following items are being considered. So the balances in the company's accounts at the First National Bank, checking 13,500 and savings 22,100, undeposited cash checks of 5,200, currency and coin on hand is 580, and savings account at the East Bay Bank with a balance of 400,000. This account is being used to accumulate cash for future planned expansion, and then 20,000 in the checking account at the East Bay Bank. The balance in the accounts represents a 20% compensating balance for a 100,000 loan with the bank. Red Wing may not withdraw the fund until the loan is due in 2024. And US Treasury bills, 2-month maturity bills totaling 15,000 and 7-month bills total 20,000. This one is 15,000 and that one is 20,000. We are required to determine the correct balance of cash and cash equivalents to be reported in the current asset section of the 2021 balance sheet, and for each of the items not included in the answer to requirement 1, explain the correct classification of the item. Okay, now let's go. So I already have the template. So here you go. So cash and cash equivalent. The first one is we should report A as a cash and cash equivalent because they are in the checking and savings account in the bank. We can have the money whenever we need it. Okay, so balance in checking account, balance in checking account, so it should be 13,500. Then balance in savings account, and that one is 2,100. And then number B, undeposited customer checks. So we can convert this one into cash before within 2-3 days. Okay, so that one is the undeposited customer checks. So that one is 5,200, correct? And then number C. So D will not be recorded because this is a restricted cash for future plant expansion. So this will not be readily available for use. So that is why we should not include this one as cash and cash equivalents. And so number C is currency and coins on hand. So currency and coins on hand, that is equal to 580. And US Treasury bills, that is actually 2-month maturity. So the 2-month maturity is 15,000. Okay, so now what I'm going to do, underline and just use the auto sum. Okay, 56,380. So this is our total cash and cash equivalents. Okay, and now requirement number 2, it is saying that we need to explain why the cash and cash equivalence doesn't include these items. So the number D, so the number D, that is 400,000, it should be other assets, sorry, or investments. Okay, and number E, so 20,000 in the checking account, that's fine. The balance in the accounts represents a 20% compensating balance for 100,000 loan with bank. So we cannot use them until 2024. So this amount is also not a cash or cash equivalent. So this one is also this 20,000 should be other assets or investments. Okay, and finally number F, we have in the number F we have two part, 2 month maturity bills and 7-month maturity bills. So that is 20,000 7-month maturity bills should be other current assets, meaning this is not a cash or cash equivalent, correct? Okay, and number 2, let's go to number 2. So Jenks borrowed 13 million from a bank at a 10% rate of interest. The bank requires Jenks to maintain 3 million compensating balance. So what is the effective interest rate in this case? Okay, here is the, so annual interest paid. So let's see what would be the annual interest. So the annual interest would be equal to 13 million multiplied by 10%. Okay, so this is the amount. Let's format it. Use the separator. Okay, so and the effective interest rate, it should be, see, this is our annual interest, and so that effective interest would be 13 million minus 3 million. See that? So this should be, let's see. Actually, we are using actual money received. This will be better. So actual money received is equal to 13 million minus 3 million. So how is that? That is equal to 10 million. Okay, and what would be the effective rate of interest? So this one. Oh. So this should be this divided by this. Okay. Why it is showing me? Okay, let's put this. Oh, we need to use the. Okay, so this one. So the effective interest rate is equal to 13%. You can see that is actually 13%, but actually we borrowed at 10%. Okay, but effective rate is 13%. Okay, I hope you got it. So and so this one is for you to solve. Okay, so this one, meaning problem number 3. So this one is very much like the problem number 1. And now come to problem number 4. So problem number 4, here we will use the gross method and net method. So the Lemsey company, a manufacturer of electric equipment. So let's see the problem read. Sold 100 units to Radius company on November 17, 2018. The units have a list price of $600 each, but Radius was given a 30% trade discount. So this is the 30% trade discount. The terms of the sale were 2, 10, and 30. It means that if you pay within 10 days, you will receive 2% discount. But the remaining amount of money that you are not paying within 10 days, you have to pay within 30 days. So we are required to prepare the journal entries to record the sale on November 17. We can ignore the cost of goods sold and collect on November 26, assuming that the gross method of accounting for cash discount is used. Okay, so this is gross method. So the first one is so it is saying we are selling on November 17. Okay, so what would be the entry? So the entry should be, before that, let's calculate the selling price. Okay, so what is the selling price? So selling price would be equal to how many units we have sold. We have sold 100 units, correct? And the price per unit is 600. So 30% discount. So it should be 100 multiplied by 600, correct? And multiplied by 0.7 because 30% is discount. So, and which is equal to 42,000. Okay, this is our selling price. Okay, now let's start. So the first one is accounts receivable debit, 42,000, and sales revenue credit 42,000. Okay, and on November 26 we are receiving the money. So November 17 and 26, so it means that they are paying within 10 days. Okay, so in that case what we will do, we are receiving cash. How much cash we are receiving? We are receiving 98% of 42,000. Okay, so what is that? So that would be 42,000 multiplied by 0.98. So that is 41,160. Okay, and sales discount is the remaining 2%. Okay, and that is 840. And so entire amount should be cash receivable, that is 42,000. Okay, so it means that received cash from actually customer within within, we can say, discount period. Within discount period. Okay, so this is our explanation. Okay, and now let's go. This is our requirement 1, and here it is. So prepare journal entries to record the sale on November 17 and collection on December 15, assuming the gross profit method is used. Okay, now let's start. So requirement 2. So the same thing, actually, we are using the gross method. So the same entry, accounts receivable, 42,000, and then sales revenue is 42,000. Okay, this is for sale, and we are receiving the entire amount on December 15 because the customer is paying after the discount period, so they are not receiving any discount. So we are receiving the entire amount. So meaning we are receiving the 42,000. So now accounts receivable 42,000. Okay, so here we can say that received cash from customer after discount period. Okay, so it tells us that the customer did not take the opportunity of cash discount. Okay, now, so the requirement number 3, it is saying the repeat requirement 1 and 2, assuming that the net method of accounting is followed. Okay, that's good, very good. So requirement 3, 1. Why 3, 1? Because requirement 3 we are doing, but we are following this one. Okay, so what we are doing, we will be recording the net amount. So net amount means our total sale is 42,000, but we will be recording 98%. So and the 98% is 41,160. So sales revenue, that is 41,160. Okay, and then November 26, meaning we are receiving the money after the discount period. So since we have already considered the discount over here, we have recorded the net amount. It means that we have already subtracted the discount. So we will just record the receivable money. So cash received, so 41,160, and accounts receivable, that is also 41,160. That's fine. Okay, and so receive cash from customer within discount period. Okay, and then this one is requirement 3.2. Okay, it means that we will consider this second scenario from here. Okay, so now let's see the same thing. We are following the net method, so the same entry, accounts receivable debit 41,160, and sales revenue, that is 41,160. And now we are receiving after the discount period. So we are actually receiving the entire amount of 42,000, and let's see how we deal with the discount we have calculated. So accounts receivable, we have recorded accounts receivable 41,000, so we'll be debiting this, crediting this one, that's fine. And the remaining amount, so the remaining, meaning the discount amount, would be sales discount forfeited. Okay, meaning the customer could not take the opportunity, so received cash from customer after discount period. Okay, so I hope you got it, and this one is for you. You will solve this one, meaning problem number 5 at home, because this is very similar to the problem number 4. Okay, I hope you understood. So if you have any question, just let me know. Thank you so much.